Now we've seen renewed interest in bellwether stocks in Nigeria's equities market, and we've seen the market start the week on a positive note, gaining 0.3%. Joshua Odebisi is a senior analyst at Vetiva. He joins me now to tell us what is going on in the equity space in Nigeria. Thank you so much for your time today, Joshua. And what are we seeing playing out here with investors and this renewed sentiment for the bellwether stocks?
Thank you for having me. So what I can say is that we've seen some very interesting movements in the market in the last 2 weeks or so, with a lot of savvy investors buying up some of your fundamentally sound stocks, and then we've also seen some profit taking in that same time. I think last week and early this week we've seen some investors coming back in to buy up some positions again, and I think this is the kind of movement we're going to continue to see because there's no real catalyst, and we have still not seen enough activity from our foreign portfolio investors. So this is mostly local activity back and forth.
Would you say we've seen that a price correction happen in the market so far?
To some extent, I would agree that yes, there has been some sort of price correction. I think a lot of stocks have found their level at this point, but I still think that overall the market is very, very much undervalued and there's still a lot of upside. So I think just due to the fact that there's not a lot of foreign portfolio investment activity, that this is the current level. But if there was a lot of international investor activity in the market, we would see a much higher level, I believe.
All right, but I'd like to get your take on what we see play out with this fourth level of restrictions put out in the Nigerian market, in Nigeria, and how you think this is going to play out, especially in the equity space, and how it's going to impact investors' sentiment.
Well, to some extent, it remains to be seen, just due to the fact that, from what we're hearing, the extent of the restrictions are going to be somewhat limited. We have curfews and obviously limited activities from government workers, work from home orders, and things like that. So hopefully it will not affect your day-to-day activity, economic activity, as greatly as the previous lockdown did. But as time goes on, I think definitely this is something that investors will price into their evaluations of the stocks, because if there is a negative impact on economic activity, then definitely a lot of sectors will be affected and this will impact their performances.
Looking at the curfews, though, it means that we're going to see some impact in the nightlife and the market there. We understand some of the fast-moving consumer goods were impacted with such restrictions the last time. What are your projections and valuations, especially for that space, the brewery space?
Yes, to some extent, there will be some impact, but I think the best way to gauge it is to look at what has been happening in Lagos, where, as far as we know, they have continued to have a curfew from, I think, 12 p.m. to 5 a.m. And yet, some bars and, local hangout spaces have still been able to operate and sell and still generate some movement, but definitely there is an impact on FMCGs. But if we look at what happened in Q1, I think the fundamentals, the financial performances of some of these players like Guinness and your Nigeria breweries were still able to sort of make up for that with the limited time that they had by moving some goods and pushing some exports and having some different, how would I say, a different approach to their marketing strategy. So I think overall there's still a little bit of wiggle room for them, but it will definitely have a negative impact.
Yeah, we're expecting the inflation figures to come out soon. We understand how this has been trending in the past months. I'd like to get what your house view is and what we can expect going forward.
Well, the house outlook for inflation is that it will continue to go up. I think our overall average for the year is about 18.41% levels or so. And so definitely we're going to continue to see a steady rise in inflation to a high of, I think, about 19.2% later on this year. But unfortunately, this is just the reality based on, the difficulties that we've had around food production and things like that really have negatively impacted on food prices, and that has been what has really pushed up inflation.
All right, definitely a lot to expect there. Joshua Odebisi there, a senior analyst at Vetiva.